In this candlestick school video, guys, we're going to look at the bullish engulfing candle. Good one, this. Stay tuned. Hey traders and investors, a very warm welcome to you. Thanks for joining me. Okay, so bullish engulfing, a nice candlestick pattern, very useful. You don't get it very often, but let's look at it. Let's look how we can use it, where it's best to take the trade when we see it, how we can get stopped out when we're wrong on it, and ultimately how you can use it to potentially make more money in your trading. Okay, so bullish engulfing, you're probably familiar with it. If you're not, we are looking at this kind of scenario. It's a candlestick to be used pretty much as it says in bullish conditions. You're going to go long when you see it. What we're looking for is the prior day has a day that's a red candle. Okay, so this day here is a red candle. It's kind of a downtrend or whatever it may be, a down day basically. And we'll talk about time frames in a second, but for this example, let's just stick on a daily chart. It's a down day. The next day, we get a gap lower. Now, the textbook is quite flexible in terms of how far that gap goes. I prefer to see it gapping under the prior day's low. So there's our prior day's low. I prefer to see the gap under that. Some people will say it's just got to be a gap below the close. I'd prefer to see a full gap below the low, so it's a proper gap. Okay, then we do some kind of trade underneath the prior day's low, and then intraday we undo all of that. We take out the prior day's close, the prior day's open, the prior day's high, and we close above the prior day's high. Now, textbooks might say it's got to be above the prior day's open. Now, I like to see full engulfing. So the body of the candle, the green body, is fully engulfing that prior red candle, high and low. The whole lot's been gobbled up. So if you think about what this is doing, this is a gap lower. Fine, bears are still in control. Rejected. Bang, slam, aggression straight away, or maybe not straight away, but before the close of the day, that undoes all that, closes the gap, takes out the prior day's high, takes out the prior day's open, closes at highs. That's why I call it engulfing, because the body is engulfing the whole bearish day. And if we look in and kind of drill down into it, we can think and it makes sense why it's such a powerful candlestick pattern. Okay, so that's the pattern. Obviously bullish. When do we take it? We want to take it under conditions where, hey, we're not at the bottom of a downtrend. I don't want to be seeing it kind of on a real heavy downtrend and then seeing it here. Okay, is it worth taking? Maybe it is on reduced size. I give you that. But you know, the odds of that working are lower. Is the reward higher? It could be. But often you get that, you get a little bit of a flick up, and then it rolls over again because you've got that larger pressure down on the market, which always generally will kind of overcome everything unless we have a larger change in sentiment. So while I don't mind taking those ones on a downtrend with reduced size, very cautious of the fact that it may well just take out the low again and go again, or kind of mess around under the low before bringing it back up. So I kind of try to avoid those if possible. And at the end of the day, guys, we are trying to find the best opportunities for us, the best chances of success, the biggest risk-reward ratio, the best probability of success with the setup. Combining those two together gives us what we want. So I've got some examples for you here. Amazon daily chart. And just a quick caveat or a quick mention before we kind of look into some examples, a couple of winners and losers for you. The point is with this is that you're probably not going to get it so much in the Forex market because it needs to see that gap. In my opinion, you need to see that gap. There are other ways of doing it. You can, of course, you're your own trader. You can adjust the flavor to suit your strategy and what you're existingly trading, the markets you trade. But for me, it's got to be in something that gaps. So you're taking the cash session of the Dow or the DAX or the FTSE or the NASDAQ, your stocks, obviously your shares, that kind of stuff. You're going to get it occasionally in the Forex market when you get that Sunday night gap, but you're not going to get it as often because you're going to see that gap. It's that gap lower that gets taken out. So here's a beautiful example on Amazon, and actually there's a few on Amazon. Like I say, stocks is the best to look for. So if you want to look for your own and kind of do your own research on it, have a look through US stocks. They're normally the best one. So let's look at this on just literally this candlestick. This is the perfect bullish engulfing. Prior day was red, gap lower, pretty aggressive gap lower, gap below the low. In fact, we'll zoom in even more so we can see it really clearly. There we go. So we gapped lower There's the open there. We did a little bit of work lower, so we kind of got maybe 15-20 minutes or an hour or so. You can't really tell like on a daily candlestick, can you? But we've got some work to the downside. Just rejected solidly, bang, takes out the fills the gap, takes out the high, closes way above the high. This is a real textbook one, guys. Real textbook. Just these two candlestick patterns. Nice big body, closes at highs as well, so you haven't got a big kind of wick at the top, which might indicate a little bit of uncertainty. No, bang, closing at highs, really solid, very high close relative to the prior days as well. And actually, an added bonus, which is not part of the bullish engulfing setup, is it takes out multiple day highs. So you're all over this. If you're waiting for this and you've got half a mind to be prepared for a bullish setup on this, you're all over this. Okay, so what are the entry rules for this? Entry rules for bullish engulfing are you take a buy on the close of the candle. You can take a buy on a break of the high the next day. I prefer to take a buy on the close. Listen, if we've had that if we've had that change in sentiment, the gap lower that's been rejected, I want to be on it. And actually, if you're extra aggressive, and I like to be extra aggressive when the conditions are right, I'm going to look at that intraday, and I'm going to find some pattern intraday to get on that. I'm going to see that it's aggressive. I'm going to predict the fact that it could be a bullish engulfing. Now, a lot of you are saying, whoa, you're trying to second guess things. I know that's how you end up messing things up. I get it, and I understand if you're on a systemized approach, you don't want to be second guessing. If you're discretionary and you're kind of giving yourself a little bit of a leg in, and I can see some strength, I mean, the last hour, I see maybe a little kind of pull back and I see aggression, I'm going to get on it to give myself a little bit of a head start. But traditionally speaking, let's stick to the roots of it, you should be taking it on the close. And then your stop is going to be under the low of the candlestick. So it's a pretty simple trade to do. A lot of people like to adjust and be a little bit flexible in the way they trade it. There's your stop. It's going to be kind of a little bit underneath that, maybe 10% of the candle width, a candle range. There's your entry. And in this example, of course, you've got $100 plus profit. However you trailed that, you are not out of the trade, are you? You stick a moving average on that. You stick a kind of however you traded it, unless of course you were trading thinking, hey, I just want a 4 or 5 day move, and of course then you're out, then fine. But again, this is up to you to understand the conditions. Talking about conditions, let's have a look at what these conditions are, which is really the key to any of these candlestick patterns, guys. It's taking the pattern that's powerful, plugging it in the right conditions. If we look at this, we've got a lovely uptrend, which is already giving us confidence. We're holding at highs. All this here is a nice hold at highs. Yes, there's a bit of a messing down here and pulling back, but look at it from the beginning of the year, drive up, holding at highs, pull back. Now we're holding it at highs. Then we see bullish engulfing. We're all over that. That's the kind of thing we want. We want to see a reasonable bullish environment or two-way environment. You don't really want downtrend, as I said earlier in the video, unless you're prepared to kind of take a small size and just be aware that you might not get what you want out of it. Another one here, pretty reasonable pullback, a little bit of a bullish engulfing down here, same kind of thing, gap lower, not quite as good, but good nevertheless, and that's giving you a profit unless you've held it and you're looking for kind of multiple month move. Of course, you're going to get stopped out, and that happens from time to time. The point is, it's a good head start if you can get on it and you can manage the trade effectively. I've got one more for you over here. If I scroll back, I remember I've got one here, or was it on another? Here we go. A nice loser here for you, so we can see exactly what happens when we're losing. You see the conditions are a little bit different. We're not very bullish, but we're in two-way trade. We're in the middle of nowhere, aren't we? So whilst it's kind of a bit of a trap sometimes to fall into, that we look for reasons why this was a failed trade, I probably would have taken this. Even though we've got a bit of red flag and saying, okay, we're in a range here. It's on the middle of a range, bottom of the range. I quite like the fact that we've pushed up, we've pulled back, but nevertheless, let's assume we've taken it. We can give reasons why it wouldn't, and you can see it's a little bit more grubby than the other examples. But here's the point. This isn't quite a bullish engulfing, and why I highlighted this is to show you that the more things you can have on your side, the more reason you've got to take the trade. This does, in some textbook terms, take out, and some people will say this is a bullish engulfing because it's taking out the prior days of the body, but I say I like it to take out the high as well, because for me that's a real change in sentiment. If we're closing at highs, then I really want to be aggressive at it. And this one happens to be a losing trade. You would have taken it and you would have been stopped out kind of 4 or 5 days later on that. It's not that bad. At the end of the day, it's $12 or so, about $10. your reward might well have been looking at that like $30-40. So it makes sense from a risk reward perspective. We've got a few red flags on that as potentially why I wouldn't take it, but let's assume you took it. If you did, your stop's not too bad. Okay, final one for you guys when you're watching this is another stock. Again, a really crisp, beautiful trade. You can see all the things we've got going for us. We've got bullish undertone with it, a bullish environment, a kind of uptrend on the higher time frames, the longer time frames. We've got the gap lower, the bigger gap the better. Big solid body, which I like to see, closing at highs, gobbling up the prior day's trade. Would it have been nice to take out the 2 or 3 day highs? Yes, it would, but it's not ever going to be perfect. It's ticking a lot of boxes here. We are in a bit of a range, but we have come up off the low, so maybe there's a change in sentiment. We've gone from $40 to $50. This is CyberArk software, by the way. Not that it matters what the actual instrument is, but again, you're going long on the close, your stop's below that low, and this one is just a nice chugger. And if you were so inclined that it was a swing trade for you, you'd have done them very nicely on this. If it didn't work out for you, what's your risk on that? Your risk is 51 to what are we looking at? 48.64. Not a lot, a few bucks, basically $2 or $3. And your reward is, well, if you held it, you've got $10, $15. Hindsight, great thing, but the point is the risk reward is very strong on the trade because you've got a kind of 1 day range stop and a multiple day range target on it. So just a summary, guys: bullish candlestick pattern, bullish engulfing. I like to see the whole of the prior day engulfed. My entry is going to be on the close. My stop's going to be under the prior day low. Good for stocks. You really want it on a daily candlestick because you're not going to get the gap on any other stuff. So really daily stuff is good for swing trading. Obviously, if you're a day trader, you might be able to fine tune the entry a little bit and be a little bit more aggressive, but that's going off piste a little bit with the strategy. One more thing I've got to say to you, and that's pretty much it, guys. Check my checklist. We're all done. Hope you enjoyed the video. Give it a thumbs up if you like this kind of stuff. Thank you for a subscription if you are subscribed to the channel, and I'll see you in the next one. Take care. Good trading. Bye bye.